It was just another day when I got a message. I keep failing all these prop firm challenges. Where am I getting it wrong? It was one of my students, Tawanda, who is a local student that I taught. He was frustrated. Like most traders, he knew how to trade and knew the basics, but he couldn't know how to consistently cash out from these markets. He was chasing the highs and lows, but always seemed to be on the wrong side of the trade. With the background check of his trading statements, I knew what had to be done. I actually knew where exactly he was getting it wrong, as well as how to fix it. We had to sit down again, go through where he was actually taking all the wrong trades. So what was now the next move? I told him about a strategy that doesn't just predict the high or low of a day, but trades it with confidence. And the best part, we use moving averages to remove all the guesswork. Fast forward a few months later, he is now cashing out like what I always do with my prop firms. And today I'm going to share with you this particular strategy that you can use to pass prop firms, cash out consistently from prop firms. It all needs your patience and discipline to follow only the rules that I'm going to give you. Ready to learn to trade with precision? Let's dive in. So this particular strategy is not going to be something that is very difficult. You are going to learn this step by step, and I'll try by all means to make it simple so that you can be able to apply it. The only things that you are going to require on your charts are the basic indicators that I use, which are the moving averages. We're going to require the 13 EMA, we're going to require the 50 EMA, the 200 EMA, and basically the 800 EMA. All other indicators that are on my charts are basically of no use for this particular trading strategy. The goal is to find the high and low of the day, basically finding the high of Tuesday if it is on Tuesday, or finding the low of Wednesday if it is on Wednesday. We are not going to be able to determine or predict the high of each and every day, as those prices may not be set as highs or lows for those particular days. All right, so what are we going to be requiring? We're going to require these three things. First, we are going to set our indicators on our chart. So in this particular case, this is gold, which is one of the most traded pairs or loved pairs by my students. We can see that there is 13, the 13 in red, 50 in blue, 200 in white. The first thing that we are going to require is to basically tune the time frame to M15. After tuning the time frame to M15, we are first going to require a crossover of 13 in red and 50 in blue. After that, we'll need the market to make an impulse from that particular crossover. So an impulse that will be issued after a 50-13 EMA cross is the first step of our strategy. After that, we need to see the market come back and retest the 50 EMA in blue like that. So we would say we now have the first impulse to the upside, and after that, if the market gives us another impulse to the upside, we also expect to get another retest of the 50 EMA, which is like this. So in this particular case, we now have two 50 EMA touches in one particular direction after the 1350 EMA cross. The next thing is now a stop hand from that last 50 EMA touch. So at this particular point, this is where we would determine as the Asian session of the market. So after having this Asian session of the market, we now need to see a stop hand to the high and then creation of a pattern for reversal. So in this particular case, a pattern was created, which is basically an M pattern to the downside. When we see an M pattern or a W pattern, depending on the market context, after two touches of the 50 EMA, we know that, or we can refer that point as the high of day or low of day for that particular day. So in this particular case, this was the high of day, and entry was going to be made obviously on the second leg. So entry at this particular second leg, there was what we call a railroad track, and our exits are always done at the 200 EMA, which is at this particular point. So we've said 1350, bounce on 50, bounce on 50, and we create the high of day. However, there are going to be several scenarios of this particular pattern. We call it variation of the theme. The market makers are very wise people, smart people who are there to take your money. So they have variations that they come and use. So let me show you those particular variations. So firstly, we are going to just have another example of what I've just told you. This is CAD against CHF, And this particular trading strategy can work on all pairs, whether crypto, whether indices, any pair of your choice. We can see that we had the first, which is the 1350 EMA cross here. After that, we can see that we had this particular retest of the 50, first one, and then we had another retest of the 50 here, meaning this was the Asian session of our cycle. And from there, we can see the market went to the downside. Our entry is always governed by a pattern. So this pattern was introduced, and this was the low of this particular day that started here and ended here. So this is the lowest price. We are going to enter at the second leg, and our exit will be at the 200 EMA. You can see from this particular point right to this particular zone as a move that we are going to make money from. All right. Another example, which is actually in live market. Sort of a lot of YouTube traders actually come and they only tell you about something that can happen in hindsight, but in real life or in foresight, it cannot be applied. So we had this particular rise, and after that rise, we had this retest of the 50 EMA. After that retest of the 50 EMA, we had another rise. After that, we can see another retest of the 50 EMA. What are we now expecting? This becomes the Asian session and a pattern. In this particular case, we can see that an M pattern is being made. First leg, second leg, and we would expect to see the market to come to the 200. Will this lose? Yes, sometimes it loses because all trading strategies works sometimes. They do not work all the time. So it might lose. So in this particular case, what we are going to do is to enter our shorts on NZD card and wait to see what the market has in store for us. However, there are these points that you should avoid. Of course, you have seen all the criteria that I've mentioned to you, which is the 1350 cross, retest of 50, retest of 50, but there will be absence of a pattern. So in this particular case, you can see we had this drop, 1350, then the market came to the 50, drop, came to the 50, and then drop. This is the law of day. However, entry on this particular type of presentation is something that is not feasible. Therefore, if a pattern is not present, it means there is no trade. No pattern, no trade should be your motto. So in summary, we are saying it's a 1350, retest of 50, retest of 50, a pattern to signify low of day or high of day. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe and join my free Telegram channel. I'll leave the link in the description box below.